Hi, mining community. Welcome back to another episode of the Dig Deep, the Mining Podcast. And today's guest is Julian Treger, who's the CEO of Anglo Pacific, who are a global natural resources royalty company listed on both the London Stock Exchange and the Toronto Stock Exchange, and aiming to become a leading natural resources company through investing in high quality projects in preferred jurisdictions with trusted counterparties and underpinned by strong ESG principles. With a diverse portfolio of assets in well-established mining jurisdictions, they have a strong balance sheet to fund new acquisitions, and it's a good base to grow from. Julian comes from the financial industry and has an MBA from Harvard Business School, and a BA from Harvard University, and is at the helm of Anglo Pacific. So it'd be interesting to hear Julian's views on the royalty market and how Anglo Pacific are progressing. So I want to welcome Julian to the podcast. How you doing, Julian?
Oh, great. Thank you for having me on.
No, and I appreciate your time as well. So I wondered if you can give our audience a little bit about a background about yourself, about your career. So maybe from when you were at Harvard, how your career progressed to sort of current day, maybe something that people may not know about you in the industry. And then I've got a number of questions that I want to ask you. So I hand it over to you.
Sure. Do my best. Well, when I graduated from Harvard Business School, I ended up working for Lord Rothschild for a couple of years. So the first thing I did was to be involved with the bid for BAT Industries with Sir James Goldsmith and Gerry Packer. And I had, tremendous experience there, and was involved in quite a lot of corporate finance activities. And so when I left him, I decided to become a sort of activist, and I got involved in restructuring of a number of big household names in the 90s that had got into trouble, like Saatchi & Saatchi, WPP, Signet, a real estate company called Greycoat. And with that, I started with a partner the first activist funds effectively in the UK. So I did that for a number of years, but I found as one was more and more successful and you had a reputation, it was difficult to get managements to work with you. And so I decided to change that and become a sort of friendly investor. And that led me in due course to invest in the natural resources space initially in 2005. I had some beginner's luck, and then found a coal company which was getting into trouble called Western Coal. We took a 26% stake in that. I went on the board, and then using the activist toolbook, I made a number of changes in terms of management, strategy, etc. And we were fortunate enough to sell that for $3.5 billion at the top of the market, to Walter Energy, which subsequently went into Chapter 11 and is now renamed Warrior Energy. And it was after that and that success in coal that the board of Anglo Pacific approached me to become CEO, because Anglo Pacific had previously grown out of a coking coal royalty in Australia. They had bought, I believe, a farm in the 90s, which they thought had gold in it. It was a sheep farm, but it didn't have gold. It had very high quality coking coal beneath it. And because we owned the land rights, we were entitled to a significant royalty. Both BHP and Rio built coking coal mines underneath the land that we bought. And that whole $250,000, I think, investment has led to around $500 million of royalty income in the subsequent sort of 20, 25 years. So that's the sort of history of how I got involved with Anglo Pacific. And that was, 7 years ago. Since then, we've really sought to transform the business completely, going from almost 100% coal. We're now around, 12, 13% of the assets is that original coking coal mine called Kestrel.
Okay, that's a fascinating background. I want to just take you back. you said obviously you work with Gerry Packer, and obviously a lot of our Australian listeners will obviously know who Gerry Packer is. How was it working with him, and what kind of things did you learn from him? Obviously back in the day.
Well, I mean, he was, not a man of many words, but he was very focused. So I thought, one could learn a lot about how to really get things done if you really want to, and focus on them, not to be distracted. I mean, I did also have his son working for me for a while as an assistant, and I don't think he was a perfect father to his son, but then his father wasn't very good to him, and so there's a lot of pattern repetition there. And I remember also when I worked for Sir James Goldsmith, he said, "Don't write anything down." And he said to me, "I want to know how things can be done, not why they can't be done." So there were some interesting lessons working with those, larger than life characters.
Yeah, certainly. So going back to Anglo Pacific, the past few weeks we've seen an extraordinary amount of activity with Anglo Pacific Group, in particular with your regarding your recent acquisition of Farsi Bay Goldport Stream transaction. Can you tell the audience a little bit more about this and what it means to Anglo?
Well, I think we've been on a path for a couple of years at Anglo, in trying to transition, as I say, away from our cold heritage to being part of the story of mining in the 21st century. I think the whole mining sector is shifting from being part of almost a 19th century sort of industrial image of belching smoke and dirtiness to being an integral part of cleanliness, a green, more responsible world. And we are part of that path for many years already. As I say, we've been diversifying away from coal. We've said we wouldn't invest in thermal coal. We've been focused for a number of years already on very high quality, pure commodities, which have less contaminants, less pollutants, and we believe, in time are increasingly valued by consumers. And this Voisey Bay acquisition, which is up to $230 million, it's quite large for us, was a considerable and distinctive transformational step further in that direction, because at one stroke, it really, increased our exposure to battery materials very significantly. The nickel mine, which produces the cobalt, which we've got a stream over, is amongst the best in the world in terms of its carbon footprint. It's a low-cost mine. It's in Canada. And so I think for people who want exposure to cobalt, obviously you can get that a little bit through Glencore. You can get it through Wheaton Precious. But if you want a lot of exposure relative to the rest of the commodities, I hope that Anglo Pacific will become the go-to stock for people to visit who want to talk to cobalt. And we're very optimistic about the future of cobalt demand.
And so what attracted to Anglo Pacific to Farsi Bay Stream in particular? What I suppose were the characters?
Anglo Pacific has like lots and lots of criteria to do a deal. And that's one of the reasons why we're sort of not a deal machine. As a royalty company, you can, of course, do a lot. Everybody would like money. But making profitable investments is much trickier. And so we have very high standards that need to be fulfilled. It needs to be in a good jurisdiction. It is, because it's in Canada. It needs to be a low-cost mine. This one is. Needs to have a good operator. This one's operated by Vale. Needs to have a long life, which it does, to 2034. Needs to have optionality we don't pay for. And there are various mine life extension prospects here. Obviously, with an ESG perspective, it needs to be responsible, but also the product needs to be clean and pure without contaminants, which it is. This one can be a premium cobalt product. And that's really sort of in contrast to a lot of the other cobalt produced in the world. less than 10% of the world's cobalt is produced in OECD jurisdictions. So we think conflict-free cobalt is rare. And then, of course, it needs to produce the right returns for us. We believe that with the prospects we think cobalt has, this should produce returns in the low teens, which is very respectable for a royalty company. And when we decide what commodity we want to go into, we also try and find commodities where the consensus, we believe, is overly pessimistic. We believe that, because the best way of making money in mining is to buy cheap. And the most impossible way, the best way of losing money, rather, is to buy expensive, because it's all cyclical. And cobalt more than halved from its peaks a few years ago. It's gone up a bit this year, but it's still, around half of where it was. And so we think there's real prospects of it outperforming consensus pricing in the coming years.
Okay. Wonder if you can tell us a little bit about the wider cobalt market. What's that like, and how do you guys fit into that picture?
Well, the cobalt market, it's not huge, although it's expected to grow a lot in the coming years. And actually, as of today, around half of cobalt demand still comes from the aerospace sector. So that already was for us quite interesting, because clearly the aerospace sector has been really badly hit by COVID. People are traveling less, though there's more cargo. But when the aerospace sector recovers, there should be a lot of demand just from that part of the cobalt customer base. And then, of course, we have the extremely interesting fast growth rates predicted for batteries for electric vehicles. And we think that cobalt will be an integral part of that. We think that the way in which batteries have evolved has meant that cobalt is less important than it used to be in the cost of a battery, and therefore with thrifting, less exposure is to cobalt. So if cobalt price doubles or triples from here, it's not going to make a huge difference in terms of substitution. So we think there's going to be ongoing demand for cobalt. And then thirdly, I think cobalt is a strategic metal. And we have seen the Chinese stockpiling it this year, which caused the price to rise. I think what we're seeing now, and since Biden came to office, nothing is persuading me otherwise, particularly as the rhetoric ratchets up with China again, and then also with Russia. I think we're going to see the breakdown we have seen already with COVID a bit of global supply chains, international supply chains. The Chinese will have their supply chains. The Americans are trying to develop their supply chains. The Europeans are going to have their supply chains. The Japanese will have their supply chains. I hope the UK has a supply chain. And each of these countries is going to need a stockpile to make sure that they can have that. So I think we haven't even seen the beginning of cobalt stockpiling yet. So all those three elements come together to present quite a rosy picture for cobalt demand in years to come. And cobalt supply generally comes as a byproduct from polymetallic nickel mines or copper mines or iron mines. All of those things are very difficult to build at the drop of a hand. So there's a long supply pipeline to get more cobalt. There's obviously brownfields extension possibilities, but self-standing cobalt mines are almost non-existent in the world. And so, it will take some time for supply to recover. Sorry, I just got a call there. And so that makes us feel very positive.
Yeah. One of the key reasons for investment you mentioned was that it positions Anglo Pacific in resources required for the 21st century. What do you mean by that, and why does it matter to your stakeholders?
Well, I think it matters to our stakeholders because I think there's going to be a lot of demand for that, and the rating for 21st century material exposure should be much higher than for bulk materials like coal and iron ore. I mean, I've been somewhat surprised that our share price hasn't responded more yet to this change. Hopefully, in coming months, that will be reflected. But we now have 60% exposure to battery materials, to copper, to vanadium, to we have some nickel, very interesting nickel in the pipeline, very interesting copper in the pipeline, and obviously now a lot of exposure to cobalt. So as the story becomes better known, I think it will create value for our shareholders. And we continue to look for more of these materials, including manganese, including rare earths, to keep bolstering the story and keep marching in that direction.
Yeah, certainly. How do you see the potential of the mining sector currently? And are you looking at completing on any other deals?
Well, I think the mining sector, as I said, is at a very interesting point. I mean, I do believe we're going to be in this quite long period of elevated demand for certain mining materials. I think that COVID will end up, it's been a disaster for the world, it's been tragic. But for the mining sector, actually, I think will be one of the more benefiting sectors than many others, like retailing, for instance, or hotels, because not only is there going to be an increased emphasis on health, on the environment, but all the governments that are going to be spending money on infrastructure plans in a sort of synchronized way, a lot of that money will go towards infrastructure and greening. And those things need our raw materials. So I think the demand picture looks quite positive for a number of years. And on the supply side, we've just had a period of a decade where there's been relative underinvestment. The majors have really focused on returning capital. And it takes 25 years from the discovery of a deposit to bring it into commercial production. So actually, for this next cycle, it's too late. The supply has to come from brownfields extensions or some sort of recycling. So I think we have a picture where demand is going to be strong, supply is going to be pretty constrained, and that's a good recipe for our sector for the next couple of years.
Yeah, I mean, it seems the perfect storm. Undersupply of materials, previously, obviously with the government, with all their plans around a greener economy, I think a lot of the for instance, energy is outdated, and looking to sort of transform those types of energy, for instance, wind, solar, all needs a lot of obviously materials from the mining industry. And yeah, with a lot of obviously government spending on infrastructure, because I think everything does need to change. I think obviously if you look at, obviously, like I said, mentioned energy, all the different types of energy the world is using, it needs to be upgraded and updated. And a lot of this comes from obviously mining. So I think it's the perfect storm for the mining industry, and to turn the industry in a positive way for the next few decades at least.
But I do think the industry needs to do much more. I mean, I believe all of that, but I don't think they should think, well, we're going to be beneficiaries so we can sit on our laurels. I think the industry really needs to transform its complexion quite fundamentally. I think versus many other sectors, we've been too slow in terms of adapting to changes. I think the sector needs to look far more diverse. There needs to be an acceptance of historic issues, more focus on rehabilitation. I think it will be good, but there's going to be disruptive change, and the incumbents need to really not sit on their backsides. They really need to move as well if they really want to take advantage of the new mood.
Yeah, and I suppose, like you said, the mining industry, it has always been slow to change and slow to react to change. But I think now they need to change, and it's those challenges that people will face in the mining industry to make those changes, no matter how difficult it is for them. But they need
Yeah.
to change. So that's going to be interesting to see how a lot of companies and people as well adapt to new environments and a new way of thinking and bringing in technology. So
yeah, I think technology is going to be a big piece of it. I think, I mean, in the next decade, I think our sector will undergo something akin to an industrial revolution. And I think where possible, people are going to work out combustion processes from things like steel making. And I think that will happen. So I think there's going to be big changes. I think it's very exciting. But as I said, you know, if you think that it's just going to remain as it is with more demand and less supply, that's not the case. I think it's going to change.
Yeah, certainly. So concluding, what's next for Anglo Pacific Group, and what would you say the sort of near to medium term future is?
I think Anglo Pacific needs to, you know, build on this transformational step by taking further steps and, you know, cementing the perception in the market's mind that we are the go-to significant battery materials / 21st century materials royalty streaming business. And so we just need to build on it. We need to get bigger. We need to raise our profile in Canada in particular. We're an odd company in that we're listed in the UK, as you mentioned. We have a listing in Canada, but we have no assets in the UK. 60% of our assets are in Canada, 25% are in Australia. So we're more Canadian and Australian than British. And, you know, those markets actually value streaming and royalty companies very highly. So we also will plan to increase our profile in those jurisdictions, as well as doing new deals.
Yeah, well, a lot of our audience are in those countries, in Australia and Canada. So obviously, hopefully they can spread the word and promote Anglo Pacific amongst their colleagues and peers. So yeah, we certainly got a strong listening in those countries anyway. So if anyone wants to reach out to you, if they've got any questions, how can they go about doing that? And are you on any social media channels?
Well, I am on Twitter, you know, with my Anglo Pacific handle. But we, you know, we're a public company. We have free access to anybody who'd like to learn more. By all means, feel free to contact me. And you know, I'm on email. We have IR people, so we'd be very interested in engaging in a dialogue with people who are interested in learning more.
Yep, certainly. And those would be accompanying the show notes in this podcast as well. So we'll put all those details there. So if anyone wants to reach out to Julian, look at the show notes, and obviously you can make contact if you've got any questions around what Anglo Pacific are doing. I'm sure Julian would be happy to answer them. So really appreciate your time and informing us of Anglo Pacific and what you have been doing and what you're looking to do. And I appreciate our audience, whoever's listening, appreciate if you can share this podcast to other colleagues that you know in the industry. Also, if you're watching on a YouTube channel, appreciate if you can like below and also share the video to other people in the industry, other people that you feel that will benefit from listening to this podcast or video recording. So I appreciate your time again, Julian. And until next time.
Thank you so much.
No worries. And until
it's my first time doing a podcast, so
yeah,
it went relatively well.
Yeah,
and I hope you have me back again when we do the next deal.
Yeah, certainly. We can certainly give updates as well later this year, next year, and yeah, you can obviously give us an update every periodically, and we can people obviously can then follow the progress of your company and how you're doing, because obviously things do change, and I imagine the industry is going to change so much for people, for companies, in a short space of time.
Yeah, well, it will be interesting to watch. Thank you so much,
No
Rob,
worries.
for having me on, and I look forward to coming again.
Yeah, no worries. Thank you very much, Julian. Speak to you soon.
Thank you.
Bye.
Bye-bye.